All righty, traders. This is Blake Morrow, and I'm going to take over for Dale Pinkert. Good morning, team. Is anybody there?
Good morning. Hello.
You know what? I don't even want to say hello to Stelios this morning because, it's interesting. Here,
what is it? What is it this time?
Oh no, look, I'm gonna call you out in front of everybody right now. Watch this. What? Watch this. Watch this. Okay, this is the ForexAnalytix chat room, guys. I just want to show you how rude Stelios is. You guys ready? You guys ready for this?
Oh, I know. I know.
Oh, no. This is great. No, this is classic. Look at this. There's Benedict right there. He says, good morning. He was saying, good morning, Amanda. There's me. And I said, good morning, everybody. This is, me popping into the chat room. Polly says, good morning. K-Man, he jumped over here and, K-Man said hello to me, like good morning. Like I see good morning from him, Benedict. And then, then there's Stelios. Hey, Polly. Hey, Benedict. And everyone else. And everyone else. And even Craig came by. He's like, "Hey, Blake,
you are like, everyone else."
I'm like, I must be chopped liver because I truly am. I feel like very, like what the. I mean, come on, Stelios. We're all we're all in the chat room saying good mornings, and then you're like,
that's why you'll never host him.
That's right. Don't come to Arizona. Don't even come here. I'm not even. I'm not even going to play pool with you. Like I'm so.
Well, that's another reason why you're not going to play pool with me. But let's not go into that. Anyway,
I'm just harassing. Good morning, guys. Hey, so no. Jokes aside, though, no. Dale's in California, and it's not the summer. There's no rolling blackouts, because California has that situation going on, and I'm not sure what happened to him, but his whole area, like there's no power right now. So hopefully he'll be back in time for the show. I'm gonna text him here in just a few minutes after we get started, because I just found out he was without power. My phone's like my phone just didn't show that he'd texted until I just saw it, and then so he'll be back hopefully a little bit later. If not, he has an interview with Michelle Snyder, Mish, from Market Gauge. We'll handle that, no problem, if he is not here. But we've seen a bit of a pullback in the dollar rally that we had seen, yesterday. And I want to defer to K-Man and Stelios and Ryan this morning and see what the catalyst was, because when I got up this morning, all I noticed is the Aussie's up, percent. The euro's up a smidge. You got the dollar Mexican peso broke down pretty aggressively overnight. I'll explain to you guys what I think is going to happen there. Some of the emerging market currencies like dollar rand's much lower. So what happened with the dollar, Ryan? I mean, what did you see?
Well, it all started last night. Really, there was a rumor going around that China was going to hold a briefing, or there was a message that China was going to hold a COVID briefing this morning in UK time, and the market got itself all excited that it was going to be, dialing back of restrictions and this and that and everything. So Chinese stocks ramped higher. Asia stocks ramped higher, Aussie dollar ramped higher, risk ramped higher. Everything got a little bit excited, and then we got this press conference, and it really was nothing, not at all anything to do with any real easing of restrictions. There was a bit of lip service to listening to the people and their COVID concerns, increased vaccinations for the elderly, that sort of thing, but absolutely nothing to say that they're going to go 180 on their restrictions. But it didn't. The rally didn't fizzle out, and that's a strange thing, because I think what happened then is it switched into a lot of end of month flows again, which is meant to be dollar bearish for this month, and we're seeing that in quite a few pairs. Like Aussie dollars kept its gains, like you say. Dollar MEX has been destroyed, Euro MEX has been destroyed, and I think it's just we're seeing a lot of flows going through, end of month flows going through. Oil's bounced as well, that's maintained its gain, but there was a bit of OPEC chatter or OPEC plus chatter about reducing production. So MEX is a commodity currency as well. So
this crude oil move, I mean, yesterday was it was glaring. I mean, if that is a false breakdown, right? So let me just go over here. And the analysis last night, if you guys didn't read it, the close back above the 76.30 level today may have caused a false breakdown in crude. So if you're short, the risk may be for a bounce because you had a false breakdown below that really critical support. And we've seen crude really rally today, and squeezing a lot of latecomers from yesterday. So I mean, if crude continues to go higher, how's that going to affect some of these commodity currencies? I mean, the dollar CAD is nearing this really big neckline, and we have GDP data. This is the big head and shoulder pattern. We have GDP data coming up here shortly. So what are you thinking here? K-Man, I know you've been fiddling around a little bit with the Canadian currency. What are your thoughts here?
K's not here.
That's right. He's on a Skype with his kids.
Oh yeah. I mean,
go ahead, Ryan.
If you compare, oil, if you're looking at oil and MEX, the move in dollar MEX and MEX pairs seems outsized for the move we're getting in crude. Crude's up what, $5, $6?
Yeah.
And dollar MEX and Euro MEX is breaking all sorts of levels that it's held for a long time. So it looks a bit outsized, the moves here, compared to just what's happening in oil. Hence why
and I know we were talking about it in the ForexAnalytix chat room, and K-Man's like, hey man, that's K-Man's like, hey man, get it? K-Man was saying that he felt that it was some end of month flows. I mean, because I was looking around going, damn it of course, I've been super bearish the dollar MEX, playing it on the short side pretty much any chance I've had for the last few months. And of course, the big breakdown below 1924, which you can see I was clearly looking at a consolidation. I just didn't think it was going to give way in European trade, and of course it happens when, I'm sleeping and not looking. And I think a lot of North American traders probably got up this morning and are doing the exact same thing. We're all looking at it going, oh shoot, I don't want to chase it down here, especially as you can see, we're nearing some pretty critical pivotal areas that have meant something, back here in early 2020. I mean, this is the COVID move, just so you guys know. This is like the COVID lockdown move, and you can see that massive breakout that happened there, and that's being tested right now. So anyway, that's interesting. What do you guys, and Stelios, we haven't heard from you this morning aside from you just calling me chopped liver. What do you think's going on with this move in the dollar? Because we've had the dollar that's obviously was really bouncing aggressively off the 200-day moving average yesterday, and if you guys didn't see that was a really key reactionary move. But we're not following through today. So what are your thoughts here?
Yeah, I like you mentioned, Ryan mentioned about China. I don't think it's that much of a of a nothing burger, as he says. They did say that they're going to do more vaccination for senior citizens. So there, there's some movement. So there's for me, it's not a complete non-event. Obviously, we're a million miles away from China reopening and anything going anywhere near to normality. But the market's like that, and the dollar goes again today. Of course, we have Bernanke. I keep saying Bernanke. Why do I say Bernanke? Sorry. We have
that's
Powell.
because you actually still live in the 90s, Stelios.
man.
I'm surprised you don't call him Greenspan.
Yeah, true. But we have Powell speaking tomorrow, and I think that it is a big event, and we could get something that really moves markets. Or I still think the probability is that he disappoints. I've said this over and over again. We got what's his name yesterday, who was saying Bullard was saying the markets are estimating how far rates are going to go. So you can't be clearer than that, and with very, very few exceptions, Brainard being one. Every single Fed member is telling us that the market's getting ahead of itself. So I'd be very, very careful being short dollars going into tomorrow. Having said that, remember what we've been saying for 2 weeks now. I think we're going to grind and grind and grind, and the dollar is going to grind lower. And the
wait, hold on.
Sorry,
I know you're just talking right now, but S&P's just actually started breaking lower. Now, I don't want to get everybody too excited. It's seems like liquidity is really poor right now, but the S&P just started breaking lower. Nasdaq, you can see here in the hourly chart, we started breaking lower. Dow is like new lows.
We said that yesterday. Yeah. I think liquidity will stay poor at least
through the World Cup.
No, at least until tomorrow, because why take fresh positions ahead of Powell speaking, right?
Right.
Yeah.
Well, Steve. Well, speaking of which, Steve, how do you feel about the markets here? The S&P is challenging this is the 200-day moving average. I mean, let's just face it, it's 200-day moving average, but I think it's too early to get bearish just yet because we're trading above 3,900. But at the same time, we are in a downtrend and the economy is not doing great. The global economy is not doing great. So what are your thoughts here about where stocks are at, or should they be lower or higher from here?
I think I'm not going to say anything different from what I've said, but I think the risks are clearly tilted to the downside, right? I wholeheartedly agree with what Stelios summarized before. Even a lot of the Fed officials have said that the market is running ahead of itself. I think it indeed does run ahead of itself. We have a very high probability that we're going to go back into a recession within the next few months. We have a high probability that unless it's a very severe one, the Fed is not going to back off. They might slow the pace of hikes. They might even stop hiking soon. But it's one thing stopping and another thing reversing course. And
right. I mean, they can end up keeping rates elevated for a long period of time.
Exactly. And the market, for some reason, is pricing in. They might end up being right about how fast the Fed might find a ceiling having to do with rates. But for some reason, they also want to seem to price in that the moment we find the ceiling, it's a matter of a few weeks to start moving in the other direction. I'm not so sure about that.
Yeah, no, I agree with you, and I think that's like a big misconception of the market, that the market believes that we're just going to be raising rates and then automatically the Fed's using that as ammo to just automatically cut rates the minute that they see some weakness in the economy. And this is really the Pavlovian training that the market has received because of, and I'll just go back to Stelios's golden days back in the 90s because of Greenspan. I want to say Greenspan really is the architect of
he wrote the playbook.
Yeah,
wrote the playbook.
He's written the playbook, and he's given the market the Pavlovian, response to like, oh, hey, if the economy falters, we're just going to go ahead and we're going to cut rates, and we're going to give you a lot of liquidity to smooth it over. But this inflation, that we're dealing with right now, it's pretty sticky. So it's
guys, just to put some context, the market is Fed Fund futures are pricing peaking rates in May, so roughly 5%, and then a 25 cut by November. So it's and another by February, by end of January. So it's it's like Steve said, the market thinks they're going to get to the ceiling in rates wherever they stop, and then within 3-4 months they've cut again. It's a tough one. I think in the medium term, the dollar is going a lot lower. But but going into the next few months or the next meeting, let's say, and the next few weeks, I think the risk is for the dollar to squeeze higher.
And I'm looking at the dollar as well, and I wouldn't want to be on the short side here. I was short overnight. So just make sure you guys understand that. I was short overnight. I was in, some emerging market currencies. I was short some euro, or long some euro, long some sterling. I wouldn't want to be on the short side down here while we're above the 200-day moving average. If you just to kind of think ahead a little bit, and I'm just going to, think about like over the next few weeks, like we might have a little bit of risk aversion here going into year end. And I want to refresh people's memory that, Santa Claus rally doesn't necessarily have to be on Christmas or before Christmas. I've seen it happen after Christmas, between Christmas and New Year's, where the market just kind of grinds higher and you get like that late Santa Claus rally. I'm thinking that, based on where the markets are right now, and you take the S&P, currently, up around that 200-day moving average, I think the S&P is at risk near term, especially after, this week. And keep in mind, we have the Fed here in the next couple of weeks. The stock market could very easily roll back over towards this like 3,800 level. And if that happens, the dollar index more than likely is going to trade back up towards maybe like this 110 level. And then we'll set up for maybe a longer term head and shoulder pattern in the dollar index. That's kind of how I'm viewing it. But we should probably be looking at rates. I mean, Ryan, what are your thoughts of the dollar right here? It's kind of tricky as we're at the 200-day moving average. Are you a seller here, or do you think there's more likely a bounce coming in?
Well, I think there's still a bounce to come. I'm still putting a lot of faith in Powell tomorrow to give it a lift. But we also start to get some of the jobs data. So it really is a swing door today or this week in terms of Powell, the data coming out, all sorts of stuff. Because we might get an ADP that goes minus 200 or something, and the market's going to get spooked about Friday's NFP. Then Powell will come out.
You don't want to be. This is strong data, strong dollar, weak data, weak dollar. Period. End of story. So this is the time to be thinking about that, and you get the opposite reaction and risk. So I know Greg is here, and we got about 10-12 minutes before we have data come out. But Greg, how are you doing today? Greg,
I'm here.
Oh, you are. Okay, good.
Yeah.
Okay, I was going to say we couldn't hear. How's it going, my friend?
I'm fine.
Oh, very good. So are you enjoying the World Cup?
Yeah, sure I do, but not Canada so much.
Well, it's nice to have you here. What are your thoughts as we've obviously had a pretty volatile start of the week with the dollar, first and foremost, the dollar showing us some weakness yesterday, but then, reversing yesterday, some strength. We're seeing a little bit of weakness today. How are you reading the dollar here from an Elliott wave perspective? And do you want to show us some charts here for a few minutes? Okay.
So just a second.
And now, if you guys don't know who Greg Horvat is, for some odd reason, he is our in-house resident Elliott wave technician that publishes his work here on 30 different instruments every single day. So he's going to give us a quick view of Elliott waves you know, in the FX market and in markets in general, because I'll tell you, it's one of the things that I have in my career struggled with is counting waves.
To 5.
Yeah, to 5 exactly. So Greg, go ahead. And it looks like Dale got here. Dale, are you here? Dale,
Okay.
Dale's probably. It looks like he's here, and he might be getting some. He might be getting coffee.
Maybe he is here through phone.
Ah,
okay. So you can see charts, right?
yes.
Yeah. So I think one very big level and reversal that we are seeing that was respected recently was at that upper trend line. So in my opinion, I think that this stop here could stay in for a while. So just from a basic technical analysis, I will not say or turn aggressively bearish, but I just think that we could continue or just continuing lower or just chopping around here. So I think that US dollar could continue lower. I'm looking at also at the intraday substructure here, since you asked after this recent price action. Notice that we haven't seen a break to a new low just yet here. Okay, while the euro dollar actually spiked to a new high. So there were some stops that were cleared, but in my opinion, this trend is still to the downside. I think that that's just a consolidation. What I really like about the recent price action is that we broke that support. It turned perfectly as a resistance here around 108. And now we are just coming back to the downside or consolidating here further for a wave 4. So I think that more weakness is coming. Also, keep in mind that despite lower stocks, okay, notice that the 10-year US notes, they're still quite strong, actually not trading much away from the highs. So in my opinion, we will see more gains here, and this could ideally be supportive for the stock market as well. However, as you mentioned, even yesterday, we are here on stocks. We are definitely at some important trend line here. Okay, I'm sure that a lot of fundamentals will not agree with this kind of a wave count. And of course, even if I label an ABC drop as a potential counter trend movement, what I would have to see is a broken trend line. Well, this trend line for now is still not being broken. So we have to be careful and even just be aware that maybe we will sell off back towards the lows here. So I will be very open-minded going into the end of the year. But if this trend line will be broken decisively, and let's say that the US markets will try to catch up the European ones, as you know, DAX is very strong. So if that happens, I think that I will have to just respect what the market is doing. I mean, we have seen a pretty nice reversal. I'm not sure if a lot of analysts were expecting this kind of a reversal. I mean, it's quite surprising to see stocks that higher if we consider where the rates are after this recent this recent bounce here. So
Greg, yeah. with that move, how do you translate that's going to work out in gold? Because gold's been like really underperforming. I mean, yes, gold's trading above what I think is good resistance at 1730. It's trading well above it, but it's really struggling to make any like bigger gains, and anybody who's long gold right now is probably pretty frustrated. So what are your thoughts here?
Well, I have here some more longer term oriented analysis. You have here Dixie in blue, you have then the 10-year US yields in black, and you can see that I can count 5 waves up. So just even if this is just a temporary top and we are now in a corrective phase, I would expect that price will retrace back towards this trend line, or possibly even back deeper into these wave 4 levels. Okay, so if that's the case, we know that US dollar index will probably follow. So on the opposite side of this, I think that gold and gold stocks could continue higher here going into 2023. So I'm in this camp. I think that we are either going sideways on dollar or even to the downside. Also, what I would take a look at is just a second to show you the
Hi, everyone. Just wanted to say hi.
Hey,
Dale.
Dale.
Hey, I woke up in the dark.
Real quick, well, before Greg, says something, I was going to say, do you guys have rolling power outages in California still this time?
This is the first power outage I could remember since the summer. So
Wow.
I don't know. Maybe they were fixing something overnight and they don't know that people get up at 4 to go to work. So
isn't that funny? They do that stuff all the time here where I live, well, in Arizona, which is one state away, but they work on stuff when they think everybody else is asleep because, well, to be honest, everybody else is asleep, right? Except for us. So anyway, Greg, go ahead. And Dale, it's nice to have you here.
All right, man.
Yeah, and since I mentioned this, that US dollar could potentially be ready to further weakness, especially if the US yields would also go much lower towards that trend line that I showed you. Well, what I'm looking at is also at the dollar yen. Now, if you're just familiar with the basics of the Elliott wave principle and maybe trying to merge with trend lines, basic technical analysis, you can clearly spot that you can very easily count 5 waves down here. Okay, so if that's the 5 waves down and you have potentially this broken trend line, well, we know that the top has been put in place and that we will most likely probably continue even lower after a 3-wave rally. So of course, nothing moves in straight line, but this type of a wave structure of this price action clearly suggests that I should be aware of more weakness. Also, I think that it was back here on the opposite side of this, just to give you some perspective here, back in December, okay? Dollar yen was the first one, that's the opposite, that's Japanese yen, was the first one that reached the top and then continued to the downside. And now we have, on the opposite side of this, we have dollar yen, which is the most impulsive from the recent highs. So it, again, can be some kind of indication where other maybe pairs will also follow. I mean, Aussie potentially is building also the bullish pattern here. So in my opinion, we have a lot of markets trying to come together, which may suggest that the US dollar top could stay in here for some time.
All right. Well, thanks for your technical or an Elliott wave view of this, and I appreciate it. We're gonna get set up because we have Canadian GDP coming out. But Greg, hey, what anything that you want to before we take back over here, anything that any big setup that you're like, I have to tell everybody about?
Yeah, I mean, I'm still long Aussie, as you know, and what I see here is just ongoing triangle. I think we will break to the upside. I like the fact that Aussie is strong despite despite this what is going on in China. Even lower Chinese yuan is not making Aussie dollar weak. We have lower copper, but still Aussie is strong. So in my opinion, if stocks will stabilize, this one will break higher.
It's great because I'm looking at the exact same way as you. And here's what I'm hoping for, Grega, just in case it does happen, just because, this week we obviously we have Powell speaking, we've got jobs data. So one of the things that I'm also thinking is in the event that we have this is the same setup as you're looking at, we have this big inverted head and shoulder pattern. What I'm hoping happens is that if we do get a breakdown for some reason, that just gives us an opportunity to get on the long side, right around the 65.50 level. That's what I'm really, hoping for in the event.
To stop me out.
Would it stop you out? Well, look, hey, we're traders.
Yeah,
we do get stopped out. I get stopped out just as much as, and maybe even more than some other traders. So it does happen, and even to the best of us. So, hey, Greg, thanks for jumping in today. We really appreciate it. We have Canadian GDP coming up in just a second, and as you guys can see, speaking of the head and shoulder pattern, you got the dollar CAD testing the underside of the trend line, and we got Dale here, which is great because we have Michelle Snyder. Coming on in just a little bit, so it'll be nice to have her here. She's from Market Gauge. Anything? Hey, Dale, you're there. Great. Did you get some coffee, by the way?
Yeah, I've had a cup.
Good. All right. Well, Power, I would be worried that you didn't have any coffee.
I was worried about that too. So
yeah, all right. I'd be actually throwing things at people. I get I don't get hangry, I get coffee angry. So all right, we have Canadian GDP. Ryan, Stelios, Steve, any last minute thoughts here?
I
No,
go ahead, Celia.
no, I was just going to say not everybody at once. I don't have anything.
All right, well, here's the Canadian GDP. And this is data flash. It does come with ForexAnalytix. You can see data as it's just being released. It's one of the many tools in the toolbox that we do have. But if you guys like to get a jump on, the data as it's released, unless you guys hear it before I see it here, let me know what.
Does it bother you? We're getting another test of 135, Blake.
It does. I
I
actually am very, very nervous about it where it's at right now.
Okay.
Being on the short side. Because if it races, I was just telling people in the chat room, if it gets much above, here you go, that GDP stronger.
Very strong.
Wow.
Yeah, very strong. So that should put the dollar CAD back below 135. But if we get much above like today's highs, I don't know if I'd want to be on the short side of that anymore. It does make me a little nervous. So let's see if we can find Michelle. Do you see her? She is
here.
Yeah, she's here.
Very good. Well, before I let you take over, Dale, nice to have you. Glad you're okay. Glad that you got your power back. Glad you get to get coffee this morning, and it's warm, so you didn't have to have that instant crap. And and I'm gonna let you take over. So, Mish, welcome to F.A.C.E. Dale, have a great interview.
Thank you,
team. Thanks for being here.
Sorry, I missed the team's update, so now I'm blind. But I shall see after talking to Mish. Mish, welcome back to F.A.C.E.
See you, Dale, and everybody. Thank you for having me.
Great to have you, Mish. So what's top of mind for you going into the last month of the year?
Well, right now I've been very busy working on my Market Outlook 2023, and I still very much have the theme of looking for inflation in all the wrong places, which is sort of like a salmon swimming upstream, since everybody, I shouldn't say everybody, but many people, the majority of people think that we've seen the peak in inflation. And I'd say that's probably true in many areas, but there are other areas that I'm watching very carefully, because I don't think that all of the geopolitical situation that we have throughout the world is going to subside. I think we have potential eruptions in different places. And also we still have some real problems with weather and food as we get into 2023. So those are the areas I'm watching as far as what can really be the macro driver of not only potentially driving the precious metals into much, much higher territories as we get into 2023, but also will probably keep a cap on the market from any kind of major rally. That doesn't mean we can't have these sort of short covering rallies that we've seen, but overall, I still think that we're going more into a stagflation environment for next year. Employment will definitely, I think if anything peaks out, it'll be employment numbers. And that will create maybe some gyrations to the downside, but overall more like a trading range.
Okay. I like the beans.
You like the beans?
Like coming out of here. There's the chart.
Yeah, and USDA, I think they delayed their report, their crop report, from yesterday to today. So that'll be interesting, something to watch.
Okay, I think they all look good. And you're right, the Fed can't print food.
No, they can't print food, and they can't control what happens globally. There may not necessarily be a more war, and it's even possible that the Ukraine-Russia war subsides, or at least gets to the point where it's not as disruptive to global economies. But that doesn't mean we can't see things like coup. I mean, you see there's social unrest in so many different areas. The Middle East has to be watched. And the other underpinning that cannot be discounted is what's happening right now with China, India, Russia, and the Middle East, which is BRICS, which is the goal that they have to try to price petrol in something other than dollars. And that would not be a good scenario for us.
You think they could pull that off?
They've been trying. I know it goes back years, and we've been hearing about it for years, but I've seen more chatter about it lately than I've had in a really long time. And it's possible that they could go ahead and try to really push it forth next year as they test what they consider to be a relatively weak administration. And that's not to get political, but that's to really say that other than throwing money at things, the United States right now doesn't seem like it's going to have an overly aggressive foreign policy stance to try to stop these things. And we know the bottom line is these countries are producers of goods, and these are goods that the whole world relies on. And that's where I think the inflation can come from. So that's what we're bracing for.
Okay, and what might add jet fuel to it is, are you a believer that the dollar is topped, or can we have another shot up and make a new high, or at least a failing rally? Your take on the dollar here, Mish?
Well, last time we talked, Dale, we said that the dollar topped, and it was a very unpopular opinion at the time. And of course, it turned out to be true. But what's interesting is that technically the dollar stopped at some really good support around the 105, 106 level. So getting a pop from there would not surprise me. The question is how big a pop. So we did try to get past up to about 107, I think, recently, and we didn't quite get through there.
Right.
If we get through 107, could we get back up to around 109, 109.50, which is where I thought we really broke down from? Yeah, absolutely. Does that mean we're going to see new highs in the dollar? No, I think there's too much pressure on the dollar. And we're also seeing the flip side of something else we talked about a while ago, which is sort of the modern version of Bretton Woods, when the central banks were buying dollars and selling gold. And now that's flipped, where a lot of countries are starting to buy gold. And of course, with this whole idea of selling dollars, but particularly not buying our treasuries, which also is going to affect our dollar. So right now, things look, I mean, if we just, this is future projection. Let's look at right now. Right now, the dollar is actually coming in a little bit lower, which has been a sign of a relief. There's been a lot of chatter about what the Fed is going to do, and the market seems to be getting used to the fact that maybe they're slowing down, even though nobody has actually said that this is a definite monetary policy change. We had German CPI come out a little softer, still high.
Yeah.
You have, but right now, if you look at the charts, forgetting about the dollar and everything, with the TLTs that have been rising because the yields have been falling, the jury's out on whether that's a flight to safety or that's a real shift in the 60-40. And in the meantime, all the key sectors that I like to watch all have held a bottom and look like they could possibly flagging to make another move up into the end of December, which would be seasonally very appropriate.
Can you see my 10-year yield chart?
Yes, I can. Let me put my
All right.
glasses.
I was looking for sharply lower yields, but we're always reassessing. And the pullback seems to be more corrective. And I look at this little falling wedge here, and maybe a bad PCE report or just some other type of news. And I don't think it would take much for us to see new highs. One more new high in yields, I think the market would be off sides on a move like that. Do you think it could happen?
Absolutely. Right now, as I said, well, first of all, I don't think that the target of getting back to 2% or 3% is realistic at all. It's possible at some point next year, we may even see the Fed say they're changing their target from 2% more to like 3 or 4%. And maybe that would give them the wherewithal to relax a little bit. But they know right now that, I mean, just like they thought that the inflation was transitory, right now, they're not going to say that they think inflation has peaked, because they're well aware of the fact that right now there's still a lot of spending. The big thing that people are saying that's going to drive the bonds yields back up and the market potentially down is the whole bond buying, which is stopping, and the whole quantitative tightening, which is continuing. I don't know about that, and I'm not even going to pretend to know about that. But what I do know, just looking from a technical standpoint right now, getting a bounce, we got a bounce in the TLTs to an incredible area, 103.80 right now, or 103.80, 103.90.
I remember I was buying them here and got stopped out, thank God, before they went to 90.
Yeah, exactly. And it looked like they were going to turn there. So not only is that a rally to resistance, but we have a chart, a weekly chart. We put in a 17-week EMA, exponential moving average. Okay. And that has not, the price of the TLTs has not been above the 17-week EMA for over a year, since last October. So if we clear through that, it would be the first time in over a year that the price is above that. And one would have to think that with the given momentum And unless something really crazy happens at the December meeting with the Fed, maybe we could see a move back up to 110. It's possible, but
Yeah,
if we
it is.
cannot get there, and we start to turn back down, and we get back down, especially under 100, which was sort of like the pivotal resistance from the low 90s, you know, that probably relays to the market that the Fed is not done and the yields are going to continue to rise. But, you know, again, be that as it
Could
may,
we see a new high in the 10-year and the long bond not make a new high, a low?
we can.
That's what I think. That would really be, hello, there's a market message for you if something like that happened, right?
Exactly. Well, that's kind of, I know, I think you talk to Michael Gayed every once in a while. That's kind of been his theory a little bit. And I tend to agree.
He must be watching me.
Well, he's a big bot, you know, he's really into
Bond
the
guy.
TLTs. That's his thing.
Yeah.
And he, you know, so he keeps saying the same thing, that the 2 years are not necessarily the most important thing. They can continue to rise, but you have to watch the 10-year. And if they continue to fall, that's going to send a real signal to the market. Initially bullish, because people are going to go, oh, wow, okay, that's great. The Fed looks like they're pivoting, but then the reality will set in. But the bigger thing is, can the Fed, like you say, can they raise like the way Volcker did? And even when Volcker did do what he did, it took another 2 years for inflation to settle down.
Well, so he stopped and then had to become even more draconian. Do you think the Fed could do that too? They start to see some negative numbers, maybe in employment. I'm not sure if it'll be this one, but they say, okay, we're going to pause for a while. And then the things you talked about earlier in the show do not abate, like food prices, and the dollar is weaker. So if the dollar's weaker, prices just go up nominally, and that the Fed will have to begin tightening again from a higher level in the spring.
It's certainly possible. I think the overriding thing to remember right now is that if they're just watching the normal CPI numbers as they are trending right now, which could come off, there is a statistic that says anytime CPI is over 8%, that it can take anywhere from 6 to 20 years for it to come down and normalize. And that's based on a research project that I just did. It is part of what I'm studying here for my Market Outlook 2023. So if you just take the pearl from that, what it's basically telling you is that if we don't have an overly aggressive Fed, which is probably going to be the case unless there's some major reason why they feel they have to really jack it up. If they just get their Fed funds rate up to what they're saying could peak out at around 5%, again, demand destruction on certain levels that we're seeing, but it's not going to do much to control all of the bubbling that we're seeing around the globe that's happening right here. And I'm not even thinking about China. I mean, China has its own issues, but China is going to be a contributor to inflation because when they come back from COVID, they're huge consumers, as we know. So this to me, I have seen nothing to change my mind about the fact that we could really go into another wave, except that it's not going to look like post-COVID wave, where everything was in short supply and people were gobbling up everything after when they came out from being sequestered. This is going to look more like chaos within the central banks around the world, chaos within the sovereigns in terms of how much money they're spending to try to support their economies, chaos if any kind of geopolitical strife happens, particularly looking at any kind of terrorist attacks or coups, that kind of thing. All of this chaos is what I think we may have to really look at as really the most unsettling part. And then what does the Fed do at that point? If they drive the rates up into that sort of thing, it will take a long time to unravel that type of inflation, number one. And number two is they just drive the economy further into a sinkhole. So I don't really see a lot of confidence coming back in the overall Fed or the economies probably until 2024, 2025.
Okay, so let's get back to where you cut your teeth on the instruments that you traded at COMEX. Are you disappointed in the fact that, you know, I was waiting for the dollar to turn bad to give jet fuel to the precious metals. I felt they really couldn't have a great bull market with a strong dollar, and now we're getting a weaker dollar. But I'm really not impressed with the action in the metals considering the weakness in the dollar. Even today, we were much higher than we are now with the dollar still weaker. Have you noticed that it's really not adding much impetus to the move in the precious metals, the weak dollar to this date?
Yes.
Why is that?
Well, there's a few reasons. One is we did have a lot of selling of gold. And so, as I said, that when that whole period when the dollar was going way up, gold was being sold as a result. But actually, that's one perspective. But if you look at it where the market has been in terms of making these lows that it hadn't seen since pre-COVID, then, and you look at the gold, it hasn't necessarily collapsed as much as one would think. It's still a relative outperformer. So I just think that it's dormant at this point. And I actually have been somewhat encouraged by the action, because when we had that massive dip, gap down, and then it closed weaker that day, and then it gapped up the next day, and it really hasn't looked back. And it's gone up to about, if we're looking at price per ounce, about 1780 or so. And now it's consolidating within a $40, $50 range here, which tells me that there's no sellers. There's no real sellers. You had some weak longs getting out when they chased that rally, but there's no real sellers like what we have seen on the way down earlier in the year. This is just a consolidation to me. And I actually feel that gold, once it can get through that 1780, 1800, and people start to realize that it is the one real hard asset that they actually can depend on, particularly if the dollar is in trouble, particularly if we start to see some geopolitical underpinnings erupt, I think you can see gold go up a lot. And I'm still bullish, very bullish.
I agree. I just think that it might work lower. And one of the reasons is the gold silver ratio, but I think the gold shares at bottom. This is my candle of the month here on Newmont. So, right back to major support, key reversal. Only another, day is tomorrow, the last day of November. So that's your monthly candle. And it's at, really flushed everyone out of 40. They were glad they got stopped out at that time. And here we are 44. So agree with you on the gold shares. I'd really like to see gold sell off hard and see what the shares are made out of. And, maybe get something like that, a washout. Do you follow the gold silver ratio at all?
Yes,
Michelle?
and actually that's been flashing. It may have softened a bit in the last couple of weeks, but it's been actually, silver's been outperforming the gold, which of course we also know is very bullish for the metals and very inflationary. Silver's just kind of like, again, it's also gotten back into this sort of range that it's in between 19 and 20 or 1850 and 20. So I don't see where I'm not negative at all. And I also think that we've had a very interesting situation for the last couple of years, which has been when they look like dreck, you buy them. And when they look really great, you sell them. And that's been a formula that's working even in a bear market. I mean, it almost acts like a bear market in a sense, except a bear market that has constant short covering rallies. That's when that changes, when we start to see buyers coming in on strength, which we started to see like a week or so ago, and then it kind of petered out. That's where I think really going to be your signal that we can look at something that could be a much more sustained and emotional rally in both silver and gold. I haven't really been watching the miners as much. Yes, the classic rule is the miners lead, but in this case, the miners don't necessarily have to lead because we have completely different metrics in terms of everything that's going on in the world.
Okay. I have to ask you about Bitcoin and hope you changed your plans on being a branch of FTX. Huh?
Well,
how does this stuff still happen, Mish? Come on. How does this stuff still happen?
Well, I as an old commodities trader, the fact if you don't have people watching so carefully in terms of regulations and things like that, these kind of things are ripe to happen. I mean, certainly they've happened before. Even like what happened with the silver market, with the Hunt brothers, it was kind of maybe the best comparison in that they thought that they could corner the market. And obviously they turned out that they were wrong about that. But in terms of, listen, I actually think it's better comparison to the dot-com bubble in a way where, every coin was hot for a while. And now the reality has set in, and greed obviously has been a huge part of it, greed, corruption, et cetera. So now I'm very patient. We've actually been in Litecoin and made money, which is amazing because we're using a quant model that uses certain metrics algorithms to find the coins that are working better. We haven't touched Bitcoin or Ethereum in a long time. But at the end of all of this, and it'll end, whatever survives will probably be unbelievable to watch and to buy at some point.
Yeah,
right now,
I mean, it's definitely blood on the streets now. And before FTX, they were already calling it a crypto winter. So what's worse than winter? I mean, what do you go to the Arctic, the crypto Arctic?
Exactly.
So it's got, Bitcoin probably, and I know very little about it, but just because there's fraud around an instrument does not mean that the instrument is not, valid or won't have a future.
I actually think it's, unless there's another meltdown, I actually think it's holding up relatively well, not to get me to want to buy it right here. But look at what Cathie Wood's doing. And she's been buying GBTC like crazy, buying coin like crazy. Now that she's certainly not become the barometer of what you should do to follow in her footsteps. But I don't think that she's
I turned off my trade copier to Cathie Wood.
Well, I only mention it because it's not that it's totally insane. Obviously, if you have deep pockets and you can afford to sit like that.
Oh, mine are so deep. Deep as the ocean.
Right. Well, I think that this 15,000 to 18,000. If we break down under 15,000, maybe we go down to closer to 10,000. But we can stay like this without any fresh news for a while until there's some reason or people are less afraid to get back in.
Yeah.
I still think that Bitcoin and Ethereum and blockchain technology are going to be hot in a certain point. Do I think it's going to be in 2023? No, I don't. So I think that you have to kind of be a little bit more patient here, and maybe we'll see it start to come back like everything in 2024, 2025. That's kind of like my time frame.
And this is a question, and we'll wrap it with this. Here's a trend line that the whole world is watching in S&Ps, right? They're all watching the downtrend from the all-time high, right? And it comes in about 4,100. What do you think? I think it's vulnerable here, but I think the lows will hold. But when we break out, if we break out, to me it's more when. Do you think that it is a change of trend, or will it just be some type of trap where we break out, we run back to 43, 4,400, and then fail again?
Well, take a look at the same chart going back to the end of 2021 and look what happened. Okay. As we were going into October, November, December, look at that run we had in 2021. And then it just peaked out and died. And so that tells me that at that point, everything was overvalued. Everything was overvalued. Things were just running too rich and not dealing with the reality of what was happening with the Fed, or what the Fed was talking about at that point, which was when they really started to talk about raising the interest rates. So now if you stretch out that chart again a little bit more to me, just so I can see the more recent activity, spread it out a little. Thank you. I think that right now, I would certainly say that if we get any kind of sustained rally, unless economically we can see some real changes here, some real growth, I don't think we've seen any real growth in this economy for a long time. There's certainly attempts to try to make the economy grow through infrastructure and things like that. But if we cannot really achieve those things, and if the Fed is going to continue to have to look at the situations we just talked about, that I don't think any rally in the S&P at this point is sustainable. And I don't think we really even understand what fair value is in a lot of the big cap stocks at this point. Now, that doesn't mean there aren't things that could go counter, of course. What's happened in the Dow has been kind of interesting, outperforming.
Yes.
But that's why I say, right, the generals. What I think you really have to watch here, though, is still, believe it or not, the small caps and the retail sector. I wouldn't be so focused on the S&P, because the small caps and the retail sector, like today we have consumer confidence, I think that's going to be the drivers to tell you what's happening within the United States and whether or not we are beating the rest of the world and continue to do so in spite of everything, because we're being more productive here in the United States. And if that can, and consumers are more confident. And if we can't achieve that, then right now, to me, rallies would be more of an opportunity to take profits if you're underwater and things have come back a little bit, or to look at, to even go short, or to start looking at other instruments that are outperforming if the market comes down. So that's kind of how I'm looking at it right now. You know, one last thing I want to say is this is coming up. There's a guy I've been following for years. He is a Chinese astrologer, feng shui expert. His name is Raymond Lowe, and he writes predictions based on the elements and also the sign that's coming up for the Chinese New Year, which this year is the year of the rabbit. And it's a water, wood, rabbit. They're very into the elements there. And so what he is saying is that the last time we had this type of setup elements, we've had years of the rabbits because, you know, they cycle every 12 years. But the last time we had the elements exactly the way they look right now was 1963. And I think that is so interesting because in 63, Kennedy was assassinated.
Yeah.
We had the start of underpinnings with the Vietnam War. You know, we had just a lot of different things that were.
That's when inflation really began. When did we come off? Bretton Woods was another 10 years from then, though, right?
Well, Bretton Woods started in the 60s at around that time, and then obviously that was when Soros made the fortune in going short the British pound. Right. But the other thing to be interesting about the 60s was that there was a lot of, and he's predicting there was a lot of weather issues with earthquakes and fires, and also that there were a lot of air traffic crashes, tons of crashes back then. So I just was looking at this and I'm like, gee, I better look at 1963 a little bit more carefully to see where there might be parallels. But he also said, more importantly, is that when you have such water elements, and I know this may sound a little woo-woo, but he's been very right for years now.
I like woo-woo.
Yeah, well, he's basically saying that until the return, he said the year of the tiger, which we're in right now, tigers carry a seed of fire, which is why we've seen these rallies. But next year, there'll be no fire anywhere. So he thinks that we're going to see a very negative year in the market. And he actually says that very specifically because of the way things are set up. So we'll see.
Okay, well, I just grabbed my rabbit's foot and hope I'm on the right side for 2023. Michelle, it's great seeing you. You look great. Nice to talk to you and get your views. And let's just go with best trade for 2023 that you'll be able to hold for a while. Do you think it's gold or silver?
Yeah, I do. I'm going to go with that. That doesn't mean that I won't trade other things. Obviously, you know, I've been relatively active trading for a while, but I do think that gold and silver have, they're percolating and they're like a volcano ready to erupt.
Yeah. Okay. It just happened in Hawaii. So we'll see. Right. So, Mitch, what's the best way for people to get in touch with you? I know on Twitter, it's at Market Minute. How about your website? Do you want to show it? Or just speak it?
I'll just mention it. It's marketgauge.com, and it's a great website because we offer a lot of information there, from everything from market internals, daily blog commentary, You could take a look around. We have 6 or 7 quant models now, and we keep expanding, including a crypto pulse model, which is actually doing well. It either stays in cash or buys something that's setting up. And also we have a blended approach now, which means with all of our models in the discretionary, you know, we have everything from country ETFs to sector models to global macro models to NASDAQ All Stars to small cap stars. You know, so what we've basically done is using quantitative models, we have really made it so that you're blended across everything, which means even if one of the models is not necessarily doing well, and we have caps on everything with stops, others have done very, very well. And I think that's really the direction of where we're going for 2023 in Market Gauge, which is really helping people through this. And also because we have a fintech company now that we're partners with, also being able to automatically trade these things through sort of a robo-advisor type of thing. Not that the robo-advisor makes the decisions for you. You buy into this blended approach and then it trades it for you.
Okay. Well, you know, I believe people should go check it out. Michelle covers the whole universe now. And, you know, her work as far as intermarket relationships, one of the best on the planet. So
well, thank you.
I wish you very happy holidays, you and Keith and your family, and always rooting for you, Michelle.
Thank you, Dale. And thank you so much for everybody who's listening. Happy holidays to you all. Hope it's a very healthy and happy one.
My trading warrior sister, Mish Schneider.
Yeah.
Thank you, Mish.
Okay, bye.
All right, bye-bye. And everyone, you could join the team in 14 minutes on the Morning Edge. See everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. I'll see you later on.